Let me know if this ever happened to you. You get in the trade and then you sell, but then it keeps going your direction and you missed out on huge profits. If that's you, this is the perfect video for you. If that's not you, then you don't actually trade. And in this video, you guys are going to figure out how to never miss out on profits again. And this video is probably the direct opposite of what you're thinking about right now. And to better explain that, let's go over a trade that I took today. You guys see, this is where I entered at. I entered under the 275. We got in puts for Tesla, which means that we're making money as the stock is going down. I sold right here at 274. You guys still saw that this dropped another $2, right? So I missed out on an extra 20% profit. Is something I would say when I first got started trading, or maybe even a year or two into it. As you guys know, trading is literally just mindset and sticking to your trading plan and just having the right approach to the market. Instead of saying missing out, because essentially you are missing out, right? You're missing out all the time. You're missing out on everything, right? There's a Drake concert right now. You're missing out on that. The problem is how you react to it and why are you missing out in the first place. There's a reason why you're missing out on the Drake concert. There's a reason why I missed out on this. And to better your mindset, you need to rethink the way that you say that. Missing out versus it moved without me is two different things, and it would actually help you to stay fully in control and not allow your emotions to win. Because if you think, oh, I'm missing out, every time that you think about selling, you're like, what if it keeps going? What if it keeps going? And that's not going to help you if you're sticking to your plan and you're like, you know what, I'm not going to stick to my plan because I think I might miss out on future gains. To alleviate that, let's get this out of the way. Number one, let's call it, it's moving without me. So Tesla moved without me after I sold. Okay, right? Now we have to figure out, is Tesla moving without me, or did you actually not stick to your plan? Because I don't even want to call it missing out on profits. It's either you stuck to your plan and you sold what you were supposed to sell and the stock moved without you, or you actually just didn't stick to your plan whatsoever because you got emotional. If that's you, that's a whole different problem. That's not you missing out on profits. That's you not sticking to your plan. I'm going to go over both. For example, this 275 break to the downside. Number one, you guys can see that Tesla now, it literally looks like a normal candle, whatever. Every single candle is a book, and you can never judge the book by its cover. Likewise, on this candle, it looks like, a nice upside candle right here, nothing crazy about it. No, the story of the candle was we had a nice aggressive push to the downside, and then it came right back up. But you wouldn't have known that unless you were really seeing how the price action was. You probably thought, oh, it just came down, came right back up. No. It was a very, very nice aggressive move to the downside, came right back up. Same thing here and same thing here, especially near this 275 break. So now we have 1, 2, 3, 4 red candles in a row. I'm entering on the 4th red candle in the row. We all know this market has not been continuing like it usually does. So I still entered. I took the risk because it was super weak. Every single time frame, and I said this in the live trading call when I took this trade live, I said every single time frame is looking super, super weak. This is when I got in. I got in around that 275. We anticipated it by like 20 cents. So we got in like right above here, and that's when we got into puts. Next thing you know, this candle comes down, comes back up, retests 275, then comes back down again. Again, it opens up and tries to come back up. Every single candle try to come back up. Next thing you know, this comes right back down. And then once it broke 274 and it went under there and kind of just held around that 70s area, that's when I sold. Number one, this is the 6th red candle in the row. Number two, I called a nice move. That was a 20% move. Number three, this is usually my plan, right? When I see the opposite momentum already starting to come in, buyers try to bring this up like 3 times already. And from past history, this starts to come up. I don't want to risk it, right? I could leave runners, right? I could definitely leave runners. But I wanted to get fully out once it broke the 274. That was my plan because it was just If you guys seen how price action was, it kept trying to come up, kept trying to come up. Buyers aggressively out of nowhere would come in. So I'm like, I don't want to deal with this right now. And NQ is also being a little weird. I sold at 274. Next thing you know, this thing drops a whole dollar, tries to come up, drops again, and then drops again. Did I miss out? I could have made an extra 20%. Did I stick to my plan though? Of course. I didn't get out because I was emotional. I didn't get out for any other reason besides I stuck to my plan, and my trading strategy told me to get out right when it broke that 274 and started holding under there and just stayed. My plan told me to sell right there. Yeah, I could have just waited in 273 and then it kept going, but the reason why I'm profitable is because I stick to my plan. The market will keep going or it will reverse, right? This thing can go only two ways. It can keep going down or go right back up. It's not your job to predict the future. It's your job to react to the present. React to the price action right now. That price action right now told me to sell. It is not our job to predict the future, because Tesla could have kept dying all day. And I'm fine with that. I'm okay with that. I could look for another re-entry maybe if 273 was setting up or 272, because 272 was setting up. Right? This literally, the low of this was around 272. This was setting up. We could have caught another clean move to the downside, right? And just waited for that chop. I was done after that. I didn't want to take another trade on Tesla because 275 was the only thing that I really was planning for. This stuff is just intraday. This 271 intraday. Maybe it was a Friday where contracts were moving a lot more, but my plan was at 275. I could have made an extra 50%. That's almost how it is every single time, because the trades that you don't miss out on, you never look back on the trades that went in the opposite direction and you sold at the perfect time. You guys only focus on the trades that you guys miss out on, but you guys never focus and go back on the trades that you sold at the perfect time and it went in the opposite direction. And if you didn't sell where you sold, you wouldn't have made as much on that trade, or you would have been break even, or you would have took a loss. You never look back on that. You only look back on the ones that kept going. For example, this thing kept going to 270, but that's not my plan. My plan is not to catch the whole entire move. That is impossible, and it's just not going to work out. Your plan is to stick to your plan. Your plan is to stick to your trading plan. Your plan is to stick to your risk management and your rules and everything like that. This is the reason why I'm profitable. I caught a 20% full in, full out. 20% of my position size. Let's say you play this to the downside under 465, right? And you got in right here. And then as you see it kind of holding up at this low day, you wait for that low day break, and that's when you sold, right? It kept going and going. You missed out. Or the market just moves like how it usually moves. It just moved without you. It's literally how the market moves. Right? Let's say you got into calls on the video right here at around 468. It kept going. Your plan was to sell at 470. You sold at 470, right? Or you saw that it tried to come down and then it just closed like this and then had one pop above 470, and then you see it starting to come back down again. You're like, all right, I'm getting out because I could identify that it's really slowing down at that 470 area. A lot of people won't look back and be like, wow, I sold at the perfect time or stuff like that, right? Because you sold here. This could have been the perfect time to sell. This was part of your plan, and this thing could have come right back up. But you never focus on that. All y'all focus on is, oh, I missed out. And then you never stick to your plan. You stick to your plan and you sold this low day. You stick to your plan and you sold this low day. You will be more profitable than the people that try and catch this whole move. You try and catch this whole move, but they never show the losses that it took in order for you to catch this whole move. Meanwhile, I'm getting on the basis 20% here, 20% here, 30% here, 20% here. Those add up because all I need to do is hit another 20%er and we just hit a home run. It's the same thing with trading. While you took 9 innings just to hit one home run, right? Took 9 innings just to hit one home run, and you try and catch the whole thing. That's not part of your plan. You're just gambling at that point. You don't want to catch the whole move because that means you didn't stick to your plan. And if you did stick to your plan and you did catch the whole move, then it just worked out. But it's just whatever the market wants to give you. The market will tell you when to sell and it will tell you when to buy. You caught it from that 465, and then you probably sold somewhere around here when it started holding up. This thing could go right back up, or this thing could keep dropping. It doesn't matter where it's going to go. It doesn't matter about the future. All it matters is if you stuck to your plan and you got out because there was a reason, because your plan told you to get out. It is not your job to predict the future, because the market can go one or two ways. You can miss out or perfect sell. You don't need a perfect sell. You need a sell that sticks to your plan. So hopefully this helps you guys to not miss out, because there is no such thing as missing out. It's either you stick to your plan and the market moves without you, or you don't stick to your plan at all and you're just not doing it right. It does not matter if the market moved without you. It doesn't matter. Market moved without me today. I could have made an extra 20-30%. I could have. If this thing came right back up and it hit my break even, or if I lost on this trade, I would beat myself up over not sticking to my plan. If I didn't sell here and it came right back up and I lost money or I was break even, I didn't stick to my plan, and I would beat myself up over it for not sticking to my plan. It just shows the lack of discipline. But because the market kept going, now you're like, oh, you know, I could have just sold a little bit later. Oh, if I just closed my eyes for 3 minutes and sold right there, I would have made way more money. It's not about making more money or making less money. It's about sticking to your plan, sticking to the strategy, and executing. That's it. And a lot of people get that mixed up. So hopefully this video helped you guys, and I'll see you guys next time. Peace.